Here are 3 reasons why to subscribe to Fridge Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What's going on, guys? It is Fridge Financials here, and we are back with another Financial Freedom Friday. Now, I know the title here is not about my net worth update like I do every single Friday, but I did have a request to talk about the new car market and the used car market. One of my supporters was talking about possibly looking at getting another car. So I wanted to bring in some education on the new car market, what's going on, where it could go, and also the used car market, where it's at and where it could go as well. Now, again, remember all these things that I talk about and I discuss and all the articles I read and everything, it's all, based on my opinion and my predictions for the future. So none of this is financial advice by any means. Make sure that, you do your own due diligence and research before anything else. But I just want to bring it forth my thoughts and my ideas to the new market and the new car market and to the used car market. If you are excited for today's video, make sure that you smash the thumbs up button and subscribe to the channel if you have not already done so. We are at 24 subscribers. We were 1 away from that magic number of 25, and the support has been absolutely awesome as of recently. So I'm going to hopefully continue to produce great content for all the people that are watching this video. Now, as you can see on my screen here, the first thing I want to look at is an article that was written by Yahoo Finance, and this article came out, I believe, yesterday. Yes, September 7th it came out, and it's talking about how there's a chance that the new car prices can plummet, and this is why they're talking about it. So a report from the UBS estimates that global car production will exceed sales by 6% this year, leaving in excess of 5 million vehicles. So if your car production is going to exceed sales by 6%, that means they're producing more cars than they're actually selling, and that means you have a lot of inventory. And if you aren't familiar about how supply and demand works, when you have a lot of supply and not a lot of demand, what happens as a result is you see a little bit of a price reduction. They'll start to drop the price a little bit lower, try to get that demand back up a little bit, try to build the demand to get some things sold off the market. And car dealerships especially do this because they have new models coming in. The 2024s coming in, next year will be the 2025s, and they don't want to have all these used cars taking up all their inventory when they can sell a brand new car instead. So you might be seeing these new cars that are 2024 models. You might be seeing these big productions and prices over the next couple months because they're trying to get rid of their inventory because they have so many vehicles available. Now, that is what Yahoo Finance is talking about, and it's a very valid point. Again, you have more supply than demand. The prices are going to be cut to kind of counteract and balance supply and demand and how it works for the consumers. But here's a variable that we have to keep track of and understand as well. As of recently, the United Auto Workers, or UAW, are getting into a negotiation with 3 big automakers: General Motors, or GM, in case you didn't know, Ford, and Chrysler maker Stellantis. Okay, now what is the big deal about this? Well, right now they're in negotiations between the automakers and the union workers of the auto workers, and it's supposedly going to be helping out over 146,000 workers. Now, that is only going to help 146,000 workers if they come to an agreement. That is the big issue right now. If they have these negotiations back and forth over labor and, the union and everything else, if they have these negotiations and they do not come to a consensus, then this means that the United Auto Workers will be going on strike. And on strike, obviously means they're not going to be working. This could be an issue because if you have a lot of workers, 146,000 workers who are on strike and not working and not producing cars, you may in fact see that the production of cars might go down quite a bit. Again, 146,000 people building cars, and it's like, nope, they're all gone, whatever. That's a huge deal. It's not like it's like 1,000 or 2,000. It is 146,000 workers that are potentially not going to be working until they come up to an agreement. That could stall production on vehicles, that could diminish production on vehicles, and just like what we were saying in the article, when you have a lot of supply and not a lot of demand, the prices will be cut. But say you don't have enough supply now because these labor workers are going to be on strike and they're not producing cars, you have not enough supply, but you have a bigger demand, you're going to see a price increase to counteract that. So the big news right now around the car market, both new and used car market, is understanding what's going to happen in the next couple weeks with this potential strike. So if you're looking at buying a car in the near future, next couple weeks, maybe next month, be on the lookout to see if this strike is in fact happening, or, if they come up with a deal, because it could definitely impact supply. And supply issues, as we've established during the COVID pandemic, supply chain issues has a huge difference and a huge impact on the prices that we are paying for anything. So keep that in mind. If you're looking at buying a car, keep up to date with the union strikes and see if they actually come to an agreement or not. Now, on top of that, what's also very interesting is that I wanted to look at some charts from the Bureau of Labor, because again, the Bureau of Labor tracks all the financial things we need to know about every market, from new cars to used cars to you name it, it's on there. So what we have here on this chart is the consumer price index for new vehicles in a U.S. city average. Now, again, it doesn't cover everybody, because it's in the U.S. city and everything, but just something to keep in mind about is that the consumer price index is a measurement about what prices are doing for the certain market. So in the new vehicle market in the U.S. city, as you can see, the average prices have been increasing and people are paying more and more, and it's been, on a steady increase ever since the back end of 2021, middle of 2021, and the new car prices have been increasing. So what does that mean? Well, here's the pandemic right here. This is a little gray area. They always like to mark the important dates. Here's the pandemic era where everything shut down and, nobody was working. And then they started to open things back up again. And then people started buying cars and started making money again. And it had this huge uptick in new vehicle prices. So that's a really expected thing. We talk about inflation, how prices keep going up and up and up. And this is just another example of showing inflation prices. Now, this index number is 179.696. That is the consumer price index for new vehicles. And if you're thinking, well, Fridge, I think I should just buy a used car then, because, if consumer prices, if this index here is increasing for new vehicles, used vehicles has got to be the way to go, right? And as much as you like to say that is true, this is the used car and trucks CPI, or consumer price index data for used cars. And as you can see here, it's at 196. So it's still higher than the new car market, which means the used car market is actually still hotter than the new car market, which is very interesting. And again, when you have a lot of demand for used cars, and maybe there's not a lot of supply, because not a lot of people, there's not as many used cars as used to. They're trying to make new cars, not used ones. Prices tend to go up. So used car prices tend to increase. And as you can see, here's the pandemic. You have this big increase, and it went up to 215 for an index number, which again is not how much they're paying a month, but that is just how expensive cars got for the used cars. People were paying like $30,000 for a brand new car in some states I saw. It was absolutely unbelievable, and I couldn't believe it. So, even with the used car prices seeming to have this kind of tail off happening, they are actually still have more of a demand. There's still more of an impact in the market compared to the new car, which is only like 179, I believe is what it was. 179.696. So very interesting to watch. And just to kind of go back to the new car one, that Yahoo Finance article is hopefully having this, you're going to see this hopefully go down by the back end of 2023 and maybe 2024. Will we ever go back to these levels? Probably not, because inflation is here to stay, it seems like, for quite some time. But you're going to hopefully see a little bit of this decrease here. Same thing with the used car ones. You're starting to see a little bit of tail off. But again, that strike could have a huge uptick in these values yet again, and you just don't know what's going to happen. So you have to keep on top of that strike to see if you're looking at buying a car in the future. Now, I wanted to also bring in a specific example of an auto loan calculator, because another interesting thing about new cars versus used cars, and this was actually brought to my attention from my girlfriend who was looking at buying a car recently, used car interest rates are actually pretty much they're not double, but they're very high, and they're higher than a new car interest rate, which is very fascinating to me. So, for example, I went to a used car dealership in Connecticut. This one is in Danbury. And a used 2013 Hyundai Tucson is $13,000 on much with 72,000 miles on it. So I said it's about $13,000. You have a loan term of about 60 months. The average interest rate for a used car is 9.76% in the state of Connecticut. That's obviously where I live. So I'm kind of basing it off of my data and what I have in my state. Again, you can go into your state and do your own research and do the same thing. CAD incentives would be zero. Down payment, usually they look about between 10 to 20%. I'll do 10% to keep it even. No trade-in value, no amount owed. Connecticut, sales tax 7%, And again, you put in the calculator here, and you see that you're paying about, $3,132 in interest by itself. You're paying 21% of your total car payment that you're paying is going to be in interest, which is kind of nuts. A fifth of your car payments total is going to actually be just interest by itself. So you're paying $17,000 for this used car. Again, this is a used car with 72,000 miles on it, getting close to 100,000. And a lot of people know these days, the more mileages you have on these cars, the more issues you could possibly have, whether it's transmission, whether, it could be anything to do with, I don't even know what else it really is in the car, to be honest. But so transmission I know is a big one. And, you have all these expected things. Maybe your car breaks down, you don't know what's wrong with it, and you got to pay for that. So that gets factored in here later on. So maybe you're paying, $20,000 after repairs or whatever else it is. So that's just for a used car. Now, going back to the dealership here, the same one. So I'm going to go to new inventory. I'm going to look at new vehicles because it's always better to look at new vehicles here. And if you look down here, let's take a look, see, have it load up for you guys to see. I'm going to store it again from price low to high. And you can get a new car, 2023 Hyundai Elantra, and again, depending on what car you want, is obviously up to you. But it's a brand new car, never driven before, off the lot, brand new, all yours, for about $22,000. So again, going back into this calculator here, so $22,000, 6 months or 60 months or 5-year loan period. The interest rate on a new car is 6.57%. So you're looking at a little over a 3% difference in interest rates, which to me is just crazy as that's that much of a difference. We'll keep a 10% down payment to make everything nice and even. And again, sales tax calculate is 7%. So in this used car here, your monthly payment was $247 and you had $3,000 in loan interest. With a new car, yeah, it's $388, sure, but you're only paying actually $300 extra in interest. And it's only 15% of a brand new car compared to the 21%. So things to keep in mind about, again, can I tell you one thing or another thing, which one to do? I really can't. I mean, it's all up to you and your financial decision, but you're paying $140 extra a month, and that can be negotiated, of course. They like to negotiate new cars, especially if the new car markets are coming down faster than the used car market in the future, potentially. So with that in mind, you can probably negotiate this down to maybe, $350, $340. So you're essentially paying $100 extra per month for a new car with no issues. Nobody else drove it before. And you have peace of mind because you have a nice warranty that covers everything for maintenance and everything else. So these are things to keep in mind about. My personal opinion, I mean, I bought a new car and I've had no issues. I had an issue with my transmission. That's why I know that. I had an issue with my transmission about 2 years ago, and the whole repair was covered all out of my warranty. Whereas if it was a used car and it wasn't covered, it was like a $3,000 difference. So, me personally speaking, again, not financial advice, new cars might be the better way to go, especially in the market right now. But I would say try to hold off if you can for the next, couple weeks, maybe a couple months, and see if the prices start coming back down again for new cars. They're not going to be like back to what they used to, but see if you can get a little bit of a better price on the car. That would just be my advice. Thank you so much for watching today's video. Again, make sure you're doing your own research and not just following my lead and my lead only. I just wanted to kind of bring to light a couple things to look at how the car market is going right now. And yeah, that's really where I'm at for today. So hopefully you guys learned something new. Again, be on the lookout for that strike. Watch the price indexes change, maybe over the new and used car prices. And think about what works for you. Run the numbers yourself. Maybe you can put a little bit more of a down payment down. Maybe you can negotiate down from $22,000 to $20,000. Even if you take off, since we're doing it here now, we can do it. Even if you take off $2,000 here, your loan's at $348 right away. And again, new cars are a lot more negotiations around because, they like to get the new cars off the lot to get ready for new cars. So, things to keep in mind about. Again, at the end of the day, it's your choice and it's your opinion and it's what you want for your car. If you want used car, great. If you want new car, great. Hopefully this brings, again, some information. Make sure that if you've made it this far in the video to subscribe to the channel if you've not already done so, and smash the thumbs up button. On Monday, I'll have a new video. I mean, if you have any comments, if you have any questions you want me to make videos about, please feel free to drop them down in the comment section below so that way I can answer your questions. I hope you guys all have a great weekend, and I will see you guys on Monday.